fraud, and it really is so prevalent among the seniors and senior living. We see this all the time.
Some of them have not, they're not as sharp as they were, right? And they get a lot more susceptible, I believe, to fraud.
There's leaders like yourself who decide, no, I'm going to be a change maker. I'm not going to go with the flow of things. I'm not just doing this for the money. I'm in it for the people. And so it's really important when we find businesses with ownership like that are doing it for the people, for a cause, and for goodness.
Financial advisors are doing like nothing to help these clients because they don't really have the ability to. Like when I was working for a big
Yeah.
bank, they wouldn't let me advise a client on getting a password protector, and that's something that I think is a fundamental, personal cybersecurity, thing that should be in place for all seniors.
Welcome back to Spotlight. I am excited to introduce our guest today, Jon Henderson from Echo 45 Financial Advisors. I've been working with Jon for a while now, and he never ceases to surprise me with his level of knowledge and professionalism. He's definitely one of our go-tos when it comes to financial advisory, wealth management, asset management, and just overall advice on what do we do when or if. So happy to introduce Jon. Jon, thank you for coming.
Thank you so much. Pleasure to be here and always good to talk to you, Athena.
Awesome. So we're going to start off with just like the basics. Not everybody understands financial advisory, wealth management, asset management, and what this means, especially when it comes in terms of seniors, because seniors, we all think like they should have this kind of figured out at this point, right? But I want to ask you and just backtrack a little bit before we dive into the weeds of things. Why did you get into financial advisory? You started your own firm. Like, what was the intention behind this? And was there any like aha moment where you said, I've got to go do this on my own?
Actually, yeah. So I was at Merrill Lynch for 20 years, same firm. Started there right out of college. That was where I thought was the best firm on the street. I was happy to be there. Then the firm, of course, got acquired in the whole financial meltdown in 2008, when all the banks sort of took over all of these different sort of wealth management firms. So then there really was no more push toward doing financial planning. It was more the banks kind of took over, and then it was like you need to sell a certain amount of banking products to your clients. And it got to the point where I had older clients that had paid off their debts because I had counseled them to do so. They were very happy being debt free. And I would have made more money if I would just sell them a home equity line of credit or,
Hmm.
get them a mortgage on their house. And all of that is in direct conflict to me in what was right for the client. So I either had to make a decision between making more money or doing the right thing for the client. And to me, that was a conflict of interest, which was just not okay. So I went and launched my own firm as a registered investment advisor, and we are held to the fiduciary standard. And we're about
Hmm.
12% of the entire industry. So the vast majority work under the suitability standard, which means that you're sort of ordering off of a menu. I'm a really nice person, like the server, and then you're telling me what you like on the menu. I may tell you what I like on the menu, and then you're ordering off the menu, and I'm bringing you what you asked for. That's how most of the industry works. We
Okay.
have to know the client. We have to do a basic, cursory understanding. So tax planning is a big part of what we do, which you just don't even hear about at most of the wealth management firms because they can't even look at a tax return if they're not a CPA. So yeah, we're different fundamentally in that way, and so that's why I launched the firm 5 years ago
I
at this
love
point.
that. It's funny how many people we talk to who worked for a firm or organization in the corporate world, whatever. There's some kind of acquisition or major change, and all of a sudden leadership went down, service went down. It's about the dollar versus the actual client. And there's leaders like yourself who decide, no, I'm going to be a change maker. I'm not going to go with the flow of things. I'm not just doing this for the money. I'm in it for the people. And so it's really important when we find businesses with ownership like that are doing it for the people, for a cause, and for goodness for our our society versus I'm just really worried about the bottom line. So I'm glad we have you around.
Well, thank you. Thank you very much. It feels good. It's a big risk. A lot of people don't leave
Yeah.
those big firms because they make it very comfortable. So, there's a lot involved. And we launched on the day that COVID started. I had these
Oh,
these were made for us, and I keep this around every day because it reminds me that sometimes I've got my timing has not always been the best, but it's been a wild ride, but it's worked out great.
Yeah, that is a tough time to start business for
Yeah,
sure.
felt kind of like
Especially,
the markets now.
yeah. Yeah, yeah. I guess there's it's very rare that we have a great time to start a business. Starting a business is just a challenge in itself. So,
Oh yeah.
yeah. So let me ask you, I heard a little bit in your story about why you serve seniors or what you do with them, but can you dive into that deeper? How do you cater specifically to seniors with the services that you offer?
Sure. Well, started, being in the business 25 years and then meeting a lot of people in my earlier years as they were moving into retirement. So meeting them in their 50s and their 60s, and then many of them now have been clients for 20 years, and so I've actually sort of aged with them and seen their needs change. And some of them they're not as sharp as they were, right? And they get a lot more susceptible, I believe, to fraud. And that's one of the
Oh,
biggest things that I think that the financial advisors are doing like nothing to help these clients because they don't really have the ability to. Like when I was working for a big
yeah.
bank, they wouldn't let me advise a client on getting a password protector, and that's something that I think is a fundamental, personal cybersecurity, thing that should be in place for all seniors. And they're not going to go do it for themselves in most cases, and they need somebody who's understands it, who's going to sit down with them. And we have people come into our office and we'll sit there and help them. Last week, we had a couple of seniors come in. They're very worried about their identity being stolen again. So
Mm,
we helped them actually to get their credit frozen. They're not going to go get any mortgages. They're not going to go open up a credit card. And
true.
they're under all this stress. I said, why are you worried? Let's just go freeze your credit. And they were like, amazing, let's do that. And they did it. And they're just not, they're not all panicked every day. So yeah, it's I think fraud awareness and then helping seniors to understand what scams are out there. It's got nothing to do with asset allocation,
Yeah.
whatsoever. That's something that I think is unique to the senior market, and that's something I've seen is becoming a greater risk every day with AI, making it so much harder for them to detect that.
Yeah, in our senior living communities, we've had presentations about like fraud, and it really is so prevalent among the seniors and senior living. We see this all the time, and it's scary because they're just a target. They don't know what they don't know. They assume everybody is honest, and they're definitely afraid to make changes because they aren't up to date or up to speed with technology and what can we do? What are our options? You mentioned that there are some things happening with AI. Is there anything that you can bring to our attention or enlighten us on in terms of like AI? This is what we watch out for, and these are some of the targets that you see right now, specifically geared towards seniors.
Ooh, really just the fundamentals. I mean, what I was thinking about AI is it's going to make it so much harder. Like you said, they tend to believe what they read as
Yeah.
is. But pretty soon you can get a video call like this from one of your children and it won't be them, is the idea. It will look like them, it will sound like them, and they can ask for money and all. It's just going to get so much harder. So it's going to be very difficult. I think it's almost, I think, going to take AI to beat AI. I was telling my wife we need to create
Oh.
almost like my assistants. Like usually I have an AI assistant that listens and takes it basically provides a transcription of the call or the meeting.
Mhm.
And then it provides insights to me in a way that I would never be able to do in 5 minutes after a meeting and then craft an email follow up to a client. So it's a huge time saver. And I think that as individuals, especially seniors, if they can start to create products like that where it joins them on a call. And if someone's asking that person for their social security number and telling this, and they can, this, it's almost like that, the voice in an Iron Man's helmet, right? And be like, hey, this sounds like it might be fraud. Let's hang up and call directly into the social security line. I've got the number for you. And I dream of the day when they have this sort of a co-pilot, for seniors to help them because I think they're at home, they have too much time, they have access to funds, and there's a
Yeah.
whole industry set up just to dupe them, unfortunately. Yeah,
Yeah, I like that. Have AI to be AI. That
yeah.
that's a thought, isn't it? But as you're talking, I was thinking, how can our seniors start to be a little bit more proactive? For one, I know we need to educate them, right? Bring awareness to them, some of the scams and fraudulent cases that are coming up, like real experiences and cases that they can hear and see and understand, but also to get them to think outside the box, things that we don't necessarily need AI for right now, asking questions. right? If something sounds like our family, if it looks like our family, if we ask those really intimate questions that only you and I should know, I don't think AI can pick up on that. So
Yeah,
that
having a family passcode is actually something they're starting to train people on. So when you
I
do get
like
that
that.
phone call, what's the passcode? And if they don't know it, hang up.
I like
Even if
that.
it sounds like them, yeah. So yeah, I think that that's actually another great family practice that people are just aren't putting into place. But it's time, and we're there.
Yeah, absolutely. So we talk a little bit about AI and the scams and things that our seniors should look out for. These are things that sounds like adult children, family members can help our seniors to just be cautious of and also be aware of, and help them through these processes. But are there any financial challenges that you can foresee seniors facing right now, especially as we are going through a little bit of a change in our economy and it's a little unknown and what's going to happen. Are there any unique situations that you foresee happening right now?
Wow, that's a whole 30-minute question right there. But yes, we're going through a sort of a tectonic shift and a shift away from basically a free market to no not non-free markets. And of course that's changing on the daily, right? And so
Yeah.
we've seen huge changes in valuations. I'm very, very politically, aware because I have to look at this every day for 25 years. Okay, and politics affects, markets, which affects, the economy, everything. But when you look at this year, coming into this year, when I came out to Kisco, at the end of last year, I told all the members that came to listen, I said the biggest risk going into the next year is going to be a reversion to the mean away from the Magnificent Seven. So the Magnificent Seven are the largest seven companies in the United States, and they now make up about 35% of the S&P 500, and they now make about 50% of the Nasdaq when you go buy the QQQ or SPY, which is how most people invest, right? And so that overconcentration existed when I started in the business in 2000 because of the dot-com boom and everybody chasing that.
Mm,
But we're not doing, it's not the same cause. Now it's not the greed of individual investors chasing, and this style creep, where everybody ends up owning the same stuff. Now it's this, they call market cap weighted exchange traded funds. I know that's wonky, but basically it just means when you put a dollar into SPY, 34 cents is going into seven companies. And that's too much of an overconcentration. So this year, whether it was going to be one president or the other, there was something was going to happen. It was going to be very different roads, but I think both of those roads were going to lead to those large companies having a retraction and the rest of the
mm,
market outperforming. So this year we believe that foreign's going to beat domestic. We believe that small and mid cap are likely going to beat these mega cap companies. So it's a way that you can rebalance your portfolio. But that was one of the biggest risks is that over concentration into those largest companies. And you saw it with DeepSeek, the largest single day decline when basically a $6 million Chinese company performed as well as a multi-billion-dollar California company. And then, that kind of rattled the markets,
yeah.
18% decline in Nvidia. Then, of course, Elon doing his thing, causing Tesla stock, dropping 44% plus. It was up 10% yesterday, another 5% today. So you're seeing huge moves. But I think by the end of the year, if you are more broad based as an investor, just across the stock market, even, you're going to be benefited and have less of a bumpy ride. But yes,
Yeah.
things revert to the mean. They always do. They find different ways to get there, but that's a big thing this year. You are looking at they're talking about trying to get interest rates quite a bit lower.
Hmm.
That could happen is when Jerome Powell's gone in 2026. It could maybe happen sooner, but that's going to affect the housing market and everybody in a huge way as interest rates start to get pushed back down. And the bond market for seniors specifically is how most of them are invested. That can present a period of time that could be a great time to be an income investor and seeing the value of those assets going up. The
Mm,
problem side is that the costs of everything around them are going to continue to go up. There's nothing that's going to go down because
right.
inflation is caused by cutting taxes, which they're going to do. It's
Yeah.
caused by tariffs, which they're already doing. And it's also caused by cutting of interest rates. And all of those things are inflationary. It's fun if you own assets, but it's not fun when you're buying things. And so that's just
Right.
people have to get used to that if everything's going to go up for a while. That's, I think, what you're looking at for a couple of years.
Yeah. Yeah. Some interesting information. Definitely. That's a lot. That's a
I
lot to
know. Sorry. I
digest.
know. I try not to
No.
unload on you, but yeah.
I mean, it's such good information. And this to me tells me why it's so important to have an expert on your side because I can't digest all this in just a short conversation. Can a senior, can someone who's not from the financial industry, just doesn't have this knowledge and background? Maybe, but probably not. And so having an expert like yourself is really important to help us understand what this means, how this impacts us, and what kind of moves we should be making. But could you walk me through if you have like an adult child, which we say the term adult child, these are for our maybe our boomers children, right? You're talking probably the ages between 40 to maybe 50 for these adult children. The boomers, and even the boomers themselves, if they're coming to you and wanting support and just wanting to know, what do I do with my investments? What are the right investments? How can I secure my future financially? What does that whole process look like? Can you walk me through that?
Sure. Yeah. If you're talking about them specifically and they're looking for help on their own personal, we start with a tax return. We look at the most recent tax return, which is kind of unusual for people. And they're like, wait, you're gonna do my taxes? Like, no, no, your taxes are done. We just want to see where everything went. Usually we can help identify right then and there if they're not optimizing certain things. That's usually one way we can help people to save some money. It's not about making money in the market even. It's just, keeping more of what you earn through avoidance of tax.
Yeah.
Taxation is the largest cost that seniors will face, going forward for sure. So, whether it's like you said, the adult children or themselves, that's a big part of it. And then we want to look at asset location. Is all of
Mm.
their money in retirement accounts? Is it in a Roth IRA where it's going to be tax free? And so we want to do an income analysis and look at the holy grail is, if you have five account types, where should the money come from? What's the
Yeah.
most optimal way? And the interesting answer is what they want, right? And everyone will tell you, oh, take it out of the taxable account, take it, then you take it from your tax deferred account, then you take it from the Roth finally. That might work, but what if you say I want to leave the largest amount to my children at the lowest tax rate in their lifetime? That's a whole different way we're going to tell you to take money. So distribution strategies, I mean, there's a lot of things that are going to go into, from asset location. And then you get into estate planning. Do they have a trust? Do they have a will? How long ago was that looked at? Are there people in there that they still trust? Do they understand how a trust works? Did they fund a trust? A lot of clients, they'll go to an attorney, they get a trust drafted, and then we look at their situation, nothing is in the trust. And I say,
Mm.
do you understand how a trust works? They go, yeah, yeah, it's just, it's gonna, my kids are gonna get everything. No, 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 the trust doesn't own anything. Your house isn't in there, your investment accounts aren't in there. And they think that the
Mm.
trust works like a will, but a will is instructions to the probate court. It's still going to go through probate. If you want to avoid probate, you have to have things in a trust. And that trust needs to be funded. And that's a whole step that even attorneys aren't really clearly explaining to clients that maybe aren't attorneys are super savvy on that. And there's really nobody else there, looking at that part of it. And you would assume that the attorney did. And a lot of times they did. Just like I missed your note, people miss that one note telling them to go to the county and do all this complicated stuff to bring their house into the title. And so they think I got this cheap trust done, but that's why it was cheap, because they didn't
Mhm.
help fund it. And then effectively it was useless. And sometimes people end up passing away thinking that they had an estate plan in place when they actually didn't.
Oh boy. Well, that is scary. That is a very scary thought. So do you partner with estate attorneys, fiduciaries? How does that work?
I'm actually have the honor of speaking at the PFAC annual conference coming up at Disneyland Hotel in like 2 weeks. Yeah, so
Wow.
yeah, so we've made a big commitment toward professional fiduciaries. This is our second year sponsoring the PFAC annual event. So
That's
we work
awesome.
with a few of them intimately now, and that's growing, and we're doing a lot for them. And so I actually launched a second company, Echo 45 Tax and Estate, which does tax prep and then is doing all these tax returns for these third parties now that these professional fiduciaries work with. And we also can draft trusts for these clients through our team of attorneys. They're called Encore Estate. They're a separate company that basically they're a team of attorneys that draft trusts in all 51 states, but they realize that the financial advisor has all the data. And so why pay an attorney $600 an hour to get your address and find out who your kids are and get all this stuff, all the information I already have. I have to take about 15 minutes with the client to ask them basically who they want as their successor trustee, some basic things that we need to know. And then the attorneys draft that trust for them, and we can just be the same concierge team they're used to working on when they move money between one account and another. They can now work with our team to not only review their account, but review their estate plan, but draft it in-house effectively through Encore Estate. And yeah, it's a very smooth process for the clients.
Yeah, it's funny that you mentioned this. I myself right now am helping my father who lives, I'm in California, my father's in the state of Hawaii. I've been trying to pair him up with an estate attorney to draft a trust, or create a trust and a fiduciary. So there's a lot of things that I haven't even been aware of, let alone my father. And you're bringing this to light. So this is a conversation and I are going to have later. But I think even for our
Yeah,
audience who's listening, they may be in the same boat. Hey, I'm helping my parents right now do X, Y, and Z, but I'm really not even privy to what's going on in the financial side. I don't know the ins and outs, legalities that might really burden us in the future. So this is really important for our audience to know. Do you typically work with adult children? Do you work with the seniors? Both? How does that kind of plan out for you?
sure. Yeah, all the above. And sadly, we have a client just passed who was 96. We loved him. He's been with us for a long, long time, and his children are all our clients. They're all a super, like a hyper successful, nice family. That we love them all. But he did pass away at 96, and we didn't even he didn't even let me know because about because we weren't talking about that side of things. But he had a
Hmm.
professional fiduciary listed, and that they've reached out to us and we've been working with them. And so now I'm fairly confident at the end of that experience, she's going to say, I want to work with this team more. This has been a great experience, to work with Jen on our team and work with Cole and Corey and Jason. So we have a trustee services team, basically devoted just to the needs of professional fiduciaries.
I love that. That's awesome. So when you're talking about these families and supporting them, not just seniors, the adult children, you really can support all family members.
Oh yeah.
Um, what advice would you be giving to, especially, I'm going to focus on seniors because I know they're just a lot of the situations that seniors tend to run into, they're a little more time sensitive, a little more, there's an emotional attachment to a lot of things that are taking place when it comes in terms of legalities or letting go of things or even drafting trusts, right? There's just a huge emotional attachment that a lot of seniors have to go through. So how do you help them when they're in a place of overwhelm? It's impacting their mental health because that is a big concern. Um, and you know that they need financial planning. Is there any specific steps that you take personally to make sure that they're in a good place mentally, that they're not feeling overwhelmed? How does that work?
Yeah, it's part therapy. It is.
Right?
It always has been.
It is.
My degree in college was in communication. It wasn't in business and finance.
Hmm.
I learned all that stuff, but it's the reason I'm good at my job is because I understand what people are driven by.
Right.
And I've seen over all these years, I've seen people come and go, Harvard graduates, they have all of the knowledge of the markets, and they're just barking at clients saying, "I beat the market," and you don't understand the numbers. And the client, I'm like, this guy doesn't get it. Like you got to understand the need. So what is keeping that client up at night? What are they really? I have clients with millions of dollars in the bank and they can't sleep. You know, it's like maybe it's turn off the 24-hour fear, mongering. You know what I mean? If that's what they're doing, sometimes I have clients that's like, what are you doing all day? Well, I'm just watching the news all day. Like, well, stop. Go out and garden.
Yeah.
Like maybe call your kids, do something like that. But yeah, where's that coming from? But sometimes it comes from a very real place, right? And they actually
Mhm.
don't have enough, and the resources are misallocated, and there is a problem. But it's almost always family relationships, Athena. It's always going to be like, they have three kids, okay? One of them's a mess, okay? It's just how
Yeah.
families are, and it's just always going to be that way. And that, sometimes the child is the problem that I'm protecting the client from. Okay, and that's
Right.
terrible. But we just went through this where
Yeah, it happens.
yeah, they're basically extorting the parents, and it's like I'm like, oh, you know, and you see that too often, where it's just I don't know, what the relationship was like, with the family before I met them, but the clients are my responsibility, and I'm here to protect them,
That's right.
from any harm out there, and even if so, sometimes it's putting a professional fiduciary in place so that mom isn't or dad isn't the gatekeeper to the funds,
Yeah.
and then they can go talk to somebody else and, harangue them every time they need money. And it puts that, kind of puts a guardrail in place where there's,
Absolutely.
yeah.
Yeah. Yeah.
So yeah,
Well,
a lot of behavioral finance stuff. Yeah.
absolutely. Yeah, definitely some therapy in there. I can see that. Well, as we come to a close, I feel like there's so much more we could talk about. You're just a wealth of knowledge. I would love for our audience to know how to connect with you and your team if they're interested in learning more or just getting some light shed on their situation or getting support from you. How do people get a hold of you?
Well, Echo 45 Advisors is our wealth management company, and then echo45taxandestate.com. So you can go to either of those sites and find us. I can provide you with a QR code if you want. If that's easy, you can put it up for people to scan. But
Perfect.
basically, Jon Henderson, I'm a certified financial planner working out of Walnut Creek, California. So Echo 45 Advisors, if you Google us, you'll probably find us.
Awesome. I love it. Well, Jon, thank you so much. Again, we're going to have to connect more because there's just so many more questions that I have. I'm sure you're going to get some members of our audience reaching out to you, but we thank you so much for giving us your time and just educating us today.
Well, it's been a pleasure, Athena. Looking forward to seeing you in our new offices right next to Byron Park.
Awesome.
And yeah, looking forward to a great summer.
I love it. Thanks, Jon.